Dan, let's get right down to discussions, and I'm going to start. You're very well known, obviously, but I guess someone is going to ask you, for starters, how did you get into the energy business? How did you choose energy?
Well, thank you, and I'll answer that. But just first, I want to say thank you for the invitation to be here. I'm very happy to be on your advisory board. I've admired Rob for a long time, and it's great to be able to do this with you this evening. I'm also glad to be here to see many people I know here in this room, and I imagine over in the overflow room as well, and welcome to see all of you. And I was particularly happy when you gave me the invitation to be here, because in the middle of winter I was really looking forward to coming down somewhere nice and warm, so it's great to be here. And
sorry about that.
And by the way, although it's not on our topic, I appreciate your remarks about globalization, because one of the things that does concern me is this kind of backlash against markets and the loss of confidence in markets. And when I wrote that book, Commanding Heights, I talked about the balance of confidence between markets and governments. And as you said, we're swinging back now, and I think that's a concern around the world. But that doesn't answer the question.
No, that's okay. That's good. I'm glad you went through that. So how'd you get into the energy business?
I was a postdoctoral fellow at Harvard, and I had taken on a subject to do on kind of the political economy of U.S.-Soviet relations. And at that time, you work on it, and back then you did things like Xerox papers and stuff like that. And I just realized that this wasn't very interesting, and energy was really fascinating. And to me, and I had the great virtue that for 2 years I had no one supervising me, so I could do what I wanted, and I kind of became an autodidact and taught myself that, and then became involved with an energy seminar that was taught at Harvard, but was a professor from the Harvard Business School, Bob Stobow, who some of you will know, who's a Houstonian. And
he was my professor at Harvard, by the way, believe it or not. Yeah.
So Bob offered me a job at the Harvard Business School to come and join an energy project. And my main reaction was, I thought they'll never make that mistake again. So I took it, and that's how I found myself. And then I got there, and I thought I was a little bit of a fish out of water.
Yeah.
And so what I did know how to do was do a book. So I said, let's do a book. And we did this book called Energy Future, and it ended up on the front page of the New York Times. And from one day to the next, I suddenly found I'd become an energy expert. That's how it works.
And your firm, just for people that knows, IHS Markit, right, which I'm very familiar with, and part of it, as we talked earlier, was incubated actually at my former firm. How do you spend your time now? What does your firm focus on?
Well, IHS Markit, I started the firm called CERA, and where we've been able to preserve it is in the name CERAWeek. And that we started with a major capital investment, which was a file cabinet from the Salvation Army, and got that launched. And it was we didn't have a venture capitalist. We had an advance for a book called The Prize, which subsidized the whole thing. And then that became part of IHS, and now IHS has merged with Markit. Some of my colleagues are here. And it's a company of 12,000 people around the world. It's a research company. Obviously, the energy component is where I live, but there's IHS Automotive, Aerospace and Defense, chemicals, economics, technology, and so forth. But I live in the energy area, and what I focus on is, I guess, the energy markets and the politics and relationships around them.
Okay. And we'll come back to that a little bit, particularly the effort to write books, and we'll come back to that. But I want to get right into talking about the energy business. Obviously, WTI is in, I guess, the low 60s. Brent's in the high 60s right now. Do I have that right? And what's your outlook for the price of oil over the next 3 to 5 years?
Well. Yeah, I
won't fool around here.
I thought that question might come up this evening. I think that, and in fact, I've always say when you have an outlook for oil, it's a derivative of a lot of other things like GDP and strength of the global economy and the interests of governments and everything and technology. But with that said, I would say that we would think that based upon what we know today and based upon the behavior of the oil exporters and the strength of the global economy, that it's reasonable for the next year or two to think that WTI will kind of orbit around $60 a barrel and Brent somewhat higher. But that view is subject to change.
Why is the spread so big right now? I know there's logistics, transportation issues. Why do you think the spread is so big at the moment?
Well, I think it's all that combination of things.
What's the biggest surprise you think that could happen over the next 3 to 5 years in terms of global supply demand? If we're wrong or we're surprised, what would be the reason for the surprise?
Well, it's a fair question to ask if we're wrong, because you do notice that, at least I notice that every 3 or 4 years there's a consensus about what's going to happen, and then something happens and the consensus really changes. We can remember an well-known oil minister in the summer of 2014 saying $100 a barrel is a good price for consumers and producers, and it was for about another 5 months. And so things really do change. You have to say, is it in economics? Is it in politics? Dramatic change in Venezuela would be one thing. But I think the thing that's probably on the agenda, and the question I get as I travel around the world, and I was just thinking you asked what I do, and between October and mid-December, I was in Russia, India, Abu Dhabi, Saudi Arabia, and China. And the question this year is all about electric cars and how will the transportation fleet change? Are we really at a turning point, and how long is that turning point? So I think we did this really started to weigh on my mind. And so about a year and a half ago, we started a project called, we thought it was a very clever title, Reinventing the Wheel, and just saying what's going to happen with automobiles, and learned a lot from that. And we can see outlines of a new future, but the pace and the extent is still to be decided. I mean, there's the kind of drumbeat of what's out there, and then there's the reality of these called supply and demand.
Well, you and I have talked about this before, because Dan's been nice enough. You and I have usually a regular call during the year to give me advice and insight on the energy business. And I know you've said before, the driverless car does not necessarily mean that demand for energy is going to decline. It's not so clear.
Yeah, well, there are really three things that are happening at the same time. One is the push to EVs. And really,
what's an EV?
An electric vehicle.
Okay.
And it's interesting because, a lot of times innovations are driven just by technology and by markets. But you go around, it really hit me in India where there's fierce discussion about this. This is really being driven by governments, and government policy is the thing that's pushing it there for various reasons, different balance and different reasons. Second thing is ride hailing, which is really different and, changes attitudes to automobile ownership. It also is a big question for public transport. And then third is autonomous vehicles. So it's kind of a combination of those three and how that mixture works out. And finally is, what do consumers want?
And what have you learned from the work you've done in terms of implications for energy, global supply demand over the next number of years?
Well, I think that first of all, what we're struck by is whatever you think about EVs, and we have our view on two scenarios where they're going to go, what actually is going to have a big impact on oil demand in terms of vehicles is fuel efficiency standards. About 80% of the global market now is under fuel efficiency standards, India, China, and that's going to show a bigger impact on demand. I think the ride hailing is really significant. And then kind of autonomous vehicles have captured imagination, but so many things have to happen. And one of the things I keep wondering, how do you do it if you have half the vehicles autonomous and the other half have drivers? How do they all interact with each other?
So one of the changes that struck me over the last just really 6 months is we had been using at the Dallas Fed an estimate of about 1.3, 1.5 million barrels a day growth in demand globally. And we've now marked that up somewhat, closer to 1.5, 1.6.
You should raise it more.
Okay, so that's
that's our advice.
And that has a profound impact on global supply demand. What's your thought on that?
I remember a couple of years ago, not so long ago, Christine Lagarde, who's head of the International Monetary Fund, kept talking about the new mediocre, really crummy world economy, and suddenly the world economy, has exceeded basically what most people expected. And that translates into demand. Even Europe's looking good, and relatively. So we have, one of the things we've been on demand, we've been out of the consensus. We've just thought it's higher because of.
So even higher than the 1.6.
Well, yeah, we've been using even like 1.8, and
okay, wow.
So that's just quite significant. And the kind of some official forecasts were down at 1.3.
Okay.
So we have a really strong world economy right now, relatively.
So there's been a lot of discussion about the OPEC agreement, 1.8 million barrels a day, agreed cuts between OPEC and other oil-producing nations, and the compliance has been relatively high. What are the prospects for that agreement, do you think, over the next year or two?
Well, I think it's, in 2014, the Russians would not make a deal. And Saudi Minister Ali Naimi walked out of the hotel room in Vienna and said, there's no deal, and the price collapsed. The Russians changed their minds, and sort of under economic pressure. And I was in Moscow for the Saudi king when he did his state visit, and it was really striking. He brought 1,100 people, 57 airplanes, 600 rental cars, and I think he brought his own furniture as well. It was really, this was, you would not have imagined this happening. So it seems to me, as observe it, that this relationship, there's still, this is still two different systems, but there seems to be, both sides have found a way to kind of strengthen that relationship. And so far, there are people in Russia powerful people who are against it, but President Putin sees it very much in Russia's interest. So I think the signs, that they'll work to maintain it. Now, the Saudis are the ones who have made, and the Gulf countries, the biggest cuts, but the Russians have made cuts.
And the implications for the Aramco IPO, which I guess is scheduled for within the next 6 to 12 months, I think, at this point.
Yeah, well, maybe more. What one hears and reads, maybe more like 12 than 6.
Okay, so how is the prospects for that and other changes in Saudi Arabia? We read a lot in the newspapers about different princes being arrested, and including ones that were very prominent in the Western world in major companies here. How's that affecting their attitudes toward energy and this agreement?
Well, I think that diversification is the is the mode, and the Crown Prince has talked a lot about that. Big program called Vision 2030, an extremely ambitious program to change the economy. It's hard to change an economy. You've got to change the culture, the educational system, all those things. And you just look at, the demographics of where people work and so forth. But I think it's the sense, there are two things. One is a population where 70% of the population is 30 years or younger. Right. You need jobs. Secondly, although globalization has gotten a bad name, people don't want to be left out of the global economy. And thirdly, it is the sense, they read about Tesla too. Saudi Arabia is a big investor in both Uber and Lyft, so it's also hedging.
So your sense is it's important to them to keep price discipline here, and in order to fuel some of this diversification that they're doing?
Well, yeah, I think that they need funds to do this. It's expensive to do it, and population has grown enormously. So I think that all the countries' revenue became the key thing.
So you and I've talked about this half humorously in some ways, the difference between a swing producer and a short cycle producer. And the reason I raise this in the context, historically OPEC was a big part of price discipline in the world. And now the dynamics have shifted, it seems, to the United States, which I'm sure is frustrating for OPEC. How do they think about this shift?
I think it's.
Or how do you think about it?
Well, I think maybe they think about it differently than I do.
Okay.
I think that for a lot of the exporters, the major exporter countries just did not take seriously what was happening here in Texas and elsewhere in the United States. They thought it was a bubble. They thought it would go away quickly, that it just wasn't going to last. And then it lasted, and it kept going, 1 million barrels a day, and 1 million barrels a day, and 1 million barrels a day. And I think now there are differences among them, but recognize this is now part of the market. Some of them will say, without what's happened in the United States, we would actually have a pretty tight and dangerous oil market in some ways. So this has been a huge contribution to the global system. So I think they've had to adjust to it. I do find that they are extremely interested in understanding how rapidly U.S. production is going to go up. And, we're now back in a system where probably this year, next year, we'll add another 2 million barrels a day in the United States. And, this amazing oil and gas industry here in Texas, the United States, has done what people didn't expect to happen. So and let me say is, I always thought, I go back and read the prize, partly because I've forgotten things in it, but also because you see different patterns at different times. And you saw that every time the price went up, and when peak oil was going to run out, that was like the 5th time that it happened. And what happens every time? New areas open up and new technologies. Didn't know exactly what the technologies were going to be, but this innovation we've seen, we talk about disruptive technologies. What's happened here in Texas is a disruptive technology.
And you said something important. You think the net increase in production in the United States next 2 years, you said 2 million barrels, right? Right? Yeah. And our estimate is usually about 75% of that is the Permian, which is here. So I take it with the growth in demand you're expecting, normally you would have said if the U.S. was going to be up 1 million barrels, and we saw this in 2017, had a big first half increase, prices tailed off because of the increased supply. I gather you think global demand is growing strong enough that the world will accommodate it and you won't have the volatility?
I think you will have volatility. At least at this point, we expect prices to be higher in 2018 than in 2019. I mean, not dramatically different.
I see. Because of supply.
Because, those who've read the prize know that there are lots and lots of characters in that book, but the 2 characters to me who have always been the most important, one's named supply and one's named demand. And that's what, it comes down at the end of the day.
And you've got to respect them.
Yeah, and I think that it's not only the U.S. where supply is going to grow. Canada probably at 500,000 barrels between now and 2020, Brazil. So there is supply coming from elsewhere too. Okay. And we're sort of assuming, some discipline continues among producers.
All right. And so actually, just for the audience, because many people don't know this, I asked you before we've had previous conversations, is the U.S. the swing producer? And you said no. And I said short cycle, maybe I'd give you a different answer. Why don't you explain to the group, what's the difference?
Well, I think some will know this well, but the swing producer means that, in 30 days you can make the decision to bring your production up or down, and that's what OPEC countries have traditionally done. Short cycle means that many of the people in this room know what it means. It means that you can make a decision and drill a well, in 90 days, you could well have production. And so it's that ability to respond very quickly. We call it at IHS Markit the reactivity of oil. And I think that's what's been really hard for the traditional exporting countries to get their minds around, that you have this reactivity. And then, I got a question from a producer, why do the producers, why do they do this? Why don't they just restrain production? And you say one hyphenated word, antitrust. I mean, there's that. And then the other side of it is that you have thousands of individual decision makers as opposed to an oil minister who can make a decision. So the U.S. is, and to some degree, we had that role in crises in 1956 and 1957. The U.S. responded when there were crises before the really big crisis. But this is a new feature, and I think it's an industry with a different dynamic, different relationship to capital markets, all of those things.
Okay. Will OPEC exist as we know it X number of years from now?
Well, there have been a lot of obituaries written for OPEC, and that's usually when they rise from, because they have to. I think now, I don't know if we're looking at a super OPEC or we call it the Vienna Group, but it's this OPEC, non-OPEC alliance. So there is a kind of reconfiguration.
Okay. And just for people, you mentioned earlier about Venezuela. How important? Explain why Venezuela is important in your thinking.
Well, it's a disaster. I mean, it's a country that had great potential, had a very strong middle class, revenues, and it's had a government that over the years since it came to power has ruined the economy, driven people out of the country, and and the oil production's going down.
Right.
It's basically kept in business by Cuba, Russia, and China. Otherwise, I mean, there's a famous quote by an economist saying, if something can't go on forever, it won't. But it has gone on, and it's caused such sorrow and tragedy for the people of the country.
Okay, so I'll ask one other question on price, and we'll go other topics. But we've been saying, for what it's worth, and you know this at the Dallas Fed, that in the next 3 to 5 years we'll have this dynamic where you've got shale that will be increasing. You haven't had long live investment projects by the majors, and global demand keeps growing. More, you think even more than we think it will be. So that 5, 6 years from now, X number of years from now, maybe that's 5, you could have a situation where as productive as shale is because of the decline curve, we're going to have a situation where we're going to get into a global undersupply situation. You're going to see spike risk to the upside.
Well, I think that that's a very reasonable scenario. I mean, there's no reason that cycles are going to be abolished, cycles of investment. And I think, there's still caution about doing big projects, making big commitments that big companies worry about their dividends. I think the other thing is that, and there's probably represented in this room, independents have come home, and even majors are concentrating more of their capital here. And I think countries have been kind of slow to get that and realize that actually this is not a period where companies are going to compete vigorously to get in, but countries have to demonstrate that they're competitive.
So there was an announcement or a proposal, I should say, to open up, by the Trump administration, open up more offshore drilling off the U.S. coast. Implications of that?
Well, I think we immediately saw Florida said, not us. And now even Virginia, which was under a Democratic governor, had previously been in favor, now raising questions. So I think that's a long-term question. I think the companies, I don't think it's a high priority for most people right now. So I think that's
because the break-even is higher?
Break-even, uncertainty, regulations can change. We might, at some point, we'll have another president, another administration.
Abundance of natural gas, LNG export facility. How does this affecting U.S.'s role in the global energy market?
I mean, it's, again, just traveling and you just see the change that this position of the United States has in the world because of our energy resources. And, we're a big oil exporter now, even as we're an importer.
Right.
But I think the LNG, we have a president who really likes to sell LNG. Every country he goes to, every heads of state who come here, get that message. I was when Prime Minister Modi from India was here, it came up as a topic. And then when I was in India, a lot of discussions by him and his government on how to use more LNG, how to use more natural gas. So I think it's been, I think it's really taken kind of a lot of politics actually out of the global gas market. And I think some of the debates about European gas, it's less relevant because of what's going to be the growing availability of U.S. gas. And to me, I look at the geopolitical on oil, we can see that had it not been for shale oil, whatever you think of it, there would not have been an Iranian nuclear deal because the market couldn't have sustained it. And what strikes me about China is that if we wind back the clock 10 years ago, it was going to be between China and the United States was this absolute competition, so it was thought, for resources, a zero-sum game. I think, there's a lot of other stresses in the relationship with China, but this has taken one big source of tension off the table, and there's China now importing LNG from the United States. I think that's a really positive thing. I mean, beyond the balance of trade issues, I think it's really positive because it says this is a degree of interdependence between the two most important countries in the world.
So before we go to the audience, I was going to ask you one last question at this point. What's the biggest geopolitical issue, concern you have based on what you're seeing in the world as it relates to energy or in general? What's the thing that worries keeping you up at night that you're seeing?
Well, I think of, a lot of focus now on Russia. And it's interesting with this talk about now we need to refurbish our nuclear arsenal. Suddenly it focuses attention that people have kind of forgotten. We have 4,000 nuclear weapons. They have roughly the same number. And whatever the difficulties, and in Washington, Russia is a toxic word, but there are these common interests around stability. But I think the biggest and most complicated issue is between China and the United States, between, as they say, the rising power and the established power. And, you could, with President Trump's visit there in November, you could see the changing balance of power. And the Chinese have this one belt, one road, an economic program, but it's kind of trying to redraw the economic map. And then there's on the naval side, and nationalism is a, very strong factor in China. So I think managing that relationship is probably long-term, in this century, the most important issue, because these are the two most important countries.
Okay, let's take a few questions from the audience. Please just go up and use the microphone, if you would, right back here, if you don't mind, and just feel free to get. I guess if you go right back behind the mic, we're just.
People to identify themselves.
Yeah, and please identify yourself. That's a good idea.
My name is Bruce Stram. I'm here in Houston, Texas. I know Dan a little bit. We've had this discussion without reference to global warming and the efforts that are being made, and we have inroads into the energy sector from renewables. Comments?
Okay. Well, that's a broad question. I think, I got a call the other day from NPR because it was 1 year and they want to talk about Trump energy policy and, what it mean to withdraw from Paris or the desire. The momentum of renewables is going to continue. I mean, as part of the deal that led to the allowing crude oil exports are very generous incentives for wind and solar. They remained in the tax legislation. States have, a lot of mandates. California's mandate is to be 100% renewable. Texas has a lot of wind. So I think renewables is a big business. Hundreds of millions of dollars or more being, billions being invested. So I think it's going to kind of continue to grow, and that, one of the drivers for electric vehicles is around climate, although there are also areas around pollution and other things as well. So I think that momentum, is just built in, and it's going to continue to grow. And we know that in terms of new electric generating capacity in the United States, the subject, Bruce, that you've known over many years, it's not going to be coal, it's not going to be nuclear, it's going to be wind, solar, and natural gas.
While we're on the subject of global warming and sustainability, obviously you go to China, you spend a lot of time there. If anyone who goes to Beijing or Shanghai and observes the air quality issue and severe problems, you have a sense on how big a job it will be for China to address those issues?
Well, I think just this year, just a day or two ago, there was a report that the air suddenly is much cleaner in China, in Beijing and so forth. Obviously, as those who went there know, it was very noxious. The government has been really tough. They closed down a lot of coal-burning facilities. What that led to when I was there was a natural gas shortage that reminded one of 1978 in the United States. Hospitals not having heat and so forth, and they've allowed some coal back in. But I think they're really determined to push ahead, and I think that's one of the reasons that they're pushing electric cars. And certainly going back to Bruce's question, they're growing their renewables. 70% of solar panels are now made in China.
Please.
Can Ercan from Turkish Consulate in Houston. Turkey is the 5th biggest natural gas importer of the world, so we are closely following the developments, global developments. And Mr. Yergin nicely chose the word interdependence between US and China. But the Trump administration would like to use energy dominance. So how would you elaborate the importance of energy in US foreign policy? And the second question, how do you assess the competition between Russian pipe gas and US LNG, especially in the southern Eastern Europe and Eastern Europe? Thank you.
Well, let me take this second question first. I kind of alluded to it, that there is, I think that the US LNG and LNG from other countries as well, the fact that that's available, that people have terminals in Poland and Lithuania and so forth, as well as elsewhere in Europe, means that countries have options. So I think Russia has an advantage on cost in terms of exporting gas to Europe, and it's a major market and it will retain that. But I think there will be other sources too, and that's why I think that in fact gas, although there's a lot of discussion and heated fervor over it, I think it's a less political issue now, even though there's a battle over a new Russian pipeline. I think it's just the realities are that the market, the basic rule of energy security is diversity, and now there's really diversity of supply. On your first question, well, I think that the view of other countries has changed because of this U.S. energy abundance in our position. And does it give us, is it leverage? I don't think it's leverage. I think what it really does is it's not only contributed this development to our energy security, but it's really contributed to global energy security, and we're a beneficiary of that. So I think it's, I think this development is really, a big contribution geopolitically. It doesn't answer all the questions. And I think this administration is also very interested in it in terms of balance of payments, as an offset to trade imbalances with countries.
Other questions? Please.
Bill?
Here. Go ahead, please.
I'm Simon Upfull-Brown. Dan and I had some renewables experience that didn't end very well. But Dan, you mentioned earlier that ride hailing as being important in future demand for oil and gasoline, etc. Could you embellish on that a little bit for us?
Sure. So I ran into the guy who actually had the original idea for Uber, and it's a great story. He was standing on a street corner with his iPhone in 2008 in San Francisco, and he was really late for a date, and he couldn't get a cab. And he said, there must be a way to have a better cab. And that was the origin of the idea of Uber. But Uber, Didi in China, which bills itself as the world's largest transportation company. I mean, this is really, ride hailing is, just a really dramatic growth in it is, and it means that the question of whether people own cars, I think for Detroit and other automakers, there's a big question, are millennials interested in owning cars? Do they, maybe their lives, it's social media rather than automobiles that give them their sense of freedom and so forth. So, and if you get to, as you get to scale in that, then there are all these interesting questions like ride share, different kinds of ride sharing. So I think this is a very major, and it may mean a lot more cars. I think New York has done a survey that just indicates that the congestion's much worse because of ride-hailing business. So there are a lot of things that flow from it. But the combination of ride-hailing, autonomous vehicles, if the world really changes, that will be, very much. And so will there be the same number of cars sold, and then how will they be fueled? So I put that up there as kind of part of these three things that are changing the world of mobility. It's not just one thing. Bill?
Please.
Hi, my name is Bill Maloney. Hi, Dan. So as we see supply and demand starting to come into balance and prices starting to firm, looking forward, is the energy business as usual, or are we going to see substantive structural change in the business of energy looking forward? Thanks.
What did you have in mind? Structural changes. Well, I mean, we've already seen one, which is the sort of shift back to the United States. I think that part of it, and I guess big question is, and the structural changes also turn into the previous questions about the role of oil. It goes back to the questions about diversification. So all of those things, I think, fit together. The question is what we've seen in the Permian and elsewhere here in Texas and North Dakota and so forth. Is this going to be replicated in other parts of the world? And I think the view was early on, yes, and then there was a lot of disappointment that came from that. But I guess I'd say, I think it's a structural change to say the U.S. has gone from being the world's largest importer down, we're 20%. Now China imports 2/3 of its oil. And I do think, maybe I think of it as a structural change. We now have to think about the big three in world oil and world natural gas. Big three, Russia, Saudi Arabia, and the United States. We're already ahead. We're now produce more oil than we've ever produced before. We are ahead of Saudi Arabia. By next year, we could be even or ahead of Russia. And then on LNG, I think that's another, if we say structural change in the market and the way the market, and the U.S. will be one of the big three with Qatar and Australia, and we might be one of the big two. So I'd maybe put those among the structural changes as well.
Yes, sir.
This is Masaki Yoshimori. So my question is, now is the high yield bond is yield is very low. So it's if so it's a Fed or more.
Can you get the mic a little closer? I can't quite hear.
If it's now is high yield bond is rate is very low, so it's market. Some economists discuss about bubble situation. So if so more rising, so interest rate by the President Kaplan. So it's how influence oil price or oil project.
So I'll paraphrase a little bit. With high yield, with the access to the high yield market and high yield rates where they are, which has obviously been a big part of financing in this industry, I think this gentleman's worried if rates were to back up, maybe due to the Fed or for other reasons, how's that going to affect the industry?
What do you think? I think that's your business.
I would, for those who know me, know I think the Fed should be removing accommodation on the one hand. On the other hand, I think when we look back a few years from now, I think we'll be surprised that rates are a little lower than people might have thought than they've been historically, where we end up. High yield credit spreads. I used to run the high yield business, among other things, in my business career. High yield credit spreads are very tight. Would it surprise me that high yield credit spreads over the next few years, just for various reasons, gap out a little bit? No, it wouldn't shock me. So I said the last comment, if I were in my previous life, and I can say this generically, one advice, I think the prospects for this industry are very bright unless you're highly leveraged. Because I think it's, as you said, and we can agree, there's going to be a lot of volatility. And I think if there's any lesson from the last few years, if you've got staying power, you got a hell of a chance to make money. You got to do other things well. But if you're highly leveraged, you're shortening the time frame and risking, as you go through these volatile periods, we're going to make it. So maybe the availability of high yield market has been a little bit of a dangerous attraction. And if people in the future find it less attractive and are a little less leveraged, it might be good for operators and for the business.
That's a much better answer than I could have given.
Thank you so much.
All right, let's take.
Yeah, my name is Greg Buchai. I'm the Honorary Consul of Ukraine. And my question is associated with the Black Sea and the exploration around the Black Sea. And I noticed that there was a number of companies drilling offshore Ukraine or attempting to drill offshore Ukraine off Crimea. And now there's a number of other companies that are drilling off Romania, and they're having some success in that department. So my question is, did Putin attack Ukraine and take over Crimea because of the oil deposits that would have made Ukraine energy independent? What's your opinion?
No, I think, remember, he said that the breakup of the Soviet Union was a great geopolitical tragedy. I think it was part of the downward spiral, and I think it was when Yanukovych was suddenly gone that I think he perhaps we'll know someday almost made the decision impulsively to do that. I think whatever the gains are in terms of Russian nationalism at home and popularity, obviously there's a big continuing cost as well as tragic situation for Ukraine.
Yes, sir.
I have intentionally an unrelated question regarding Putin. I'm Steve Lukingbiel. I was really surprised by your remark that Putin and the Russians played a very large role in the price collapse in 2014 with the Saudis. Does that mean we might be underestimating the effect of personalities in the price of oil? You have the Crown Prince of Saudi Arabia and Putin, who are both extraordinary personalities that seem to just have extraordinary influence on the price. If that's true, what role do you expect them to play in the next 5 or 10 years?
Well, if I gave the impression, that's a very good question. If I gave the impression that it was Russia that was responsible for the price collapse, I didn't. I just meant at the very immediate series of events that happened in the end of 2014. It was supply and demand. You had very weak demand in the world because of this mediocre world economy, and you had the surge of 1 million barrels a day year after year in the United States, and so you had a market. I mean, you could see that the market was just way out of balance, and so something was going to have to happen. And probably if the producers had cut back then, they would have had to cut back more probably. So that said, personality is important, and you have, instead of a 91-year-old person being king of Saudi Arabia, you have a crown prince who's 32 and just wants to get everything done all at the same time. So I think personalities do make a big difference, but those basic forces, the market was going to have to adjust in some way because it was just so out of whack at that point.
Yes, sir.
Hi, Alvaro Neto, student at Rice University. So first question on the structure of the markets. You have certain projections expecting demand to flow from cheap oil, OPEC, specifically Saudi Arabia. Then you have the executive director of IEA mentioning that in a few years, the United States will be the leading supplier of oil. Wondering which direction you think that is going to go. Second question, with the advent of shale oil, what does that essentially, what will be the consequences for frontier markets that rely on resource economies for sustainability? Very quickly, very last question.
I need to stop because we've got other people and I just want to get everybody in. So can we stop? Do you mind if we stop there and just answer those two?
The last question is a yes or no question.
Okay.
It's just, I was urged to buy your book and come and hear you talk, so I was wondering if I could get your autograph at the end.
Yeah. Yes!
You should have made that your first question.
That's one of the best questions I've ever gotten. Thank you. Let me take the second one. I think it is. I mean, I think it is goes back to countries needing to be competitive to get investment. So I think for frontier countries, one of the great drivers of oil development around the world were the large independents of the United States going outside the United States, but they're now come home. So I think it is challenging, and I think for resource countries that are resource dependent, it's the perennial question of how do you manage that so that you don't kill the other parts and stymie the other parts of your economy.
Please.
Thank you, Daniel. My question is going back to what the previous speaker said about price. Typically, most companies do their NPV project sanction appraisal method using your NPV discounted cash flow method. I just want to know what your comments are, where you could use the modern asset pricing method, basically the Black-Scholes option theory. That probably, because the key thing which we have in terms of projects is price volatility, which is not priced in or computed or quantified or qualified when you're doing project appraisal. So I think that's one of the key things operators or service companies need to put into their business model what they're trying to do. So your comments, please.
Well, obviously people need a price framework to make a decision, but as you say, the volatility and the unexpected happens. I mean, certainly we saw that in the period leading up to 2014. The expectations that $100 was the new normal, was the new 20, and costs were rising so high, and of course that now led to a couple of years of real pain for companies and for the industry.
I'll make one other comment because I can't help myself. If you look broadly at markets today, one thing I've observed, the risk-free rate has never been lower across markets because oil stocks, I should say, over the last year have been disappointing to investors. You hear a little bit more now about disciplined growth. And I guess that's a nice way of saying maybe the risk-free rate is a little higher, the risk premium is a little higher in energy. Maybe that's a healthy thing. But it's in the context of a world, and one of the things I'm watching myself is where the risk premium for investments, is breathtaking. It's sort of, you have to look twice. In energy, maybe there's a little bit more discipline, but it's in the context of expected rates of return are really low, and it's striking.
Can I just say, I think that it is interesting. You mentioned about capital discipline, and when I was writing the Quest, I noticed that just before oil prices took off, that was a period like 2003 where all the investor firms were all saying you need capital discipline. We're going to watch that very carefully, and of course, then prices took off and people had to really catch up. And did notice, like second half of last year, you started seeing sentences and comments that sounded very much like 2003, and just, processed it.
People are a little quicker today to abandon discipline than they have been historically, but it's funny you say that.
Hi, my name's Sarah Cove, and I had two quick questions. The one is, what do you see the space for storage, energy storage, being going forward, and what do you see that being about in the next 10 years and the challenges of that? The other is, with the Paris Agreement, there are countries like China has agreed to have, I think, peak emissions by 2030, and EU 40% reduction in emissions by 2030. So how do you see those sort of targets and those set agreements that are there, plus the increased demand of oil? How do you see those two things kind of playing out going forward?
Well, by storage, you mean storage of electricity? Yeah, I think, I guess if going back to your question, if there's something that would really be a surprise, although not quite a surprise because people are working on it, would be electricity storage on a big scale would really be a very decisive development. And obviously, a lot of people, investment, research is going into that. So, yes, and you sort of wonder, will it happen in a big breakthrough, or will it be just incremental improvement?
And if that were possible, what would be the implications?
Well, I think it would really be a huge boost to renewables because they're intermittent.
Got it.
Yeah. On your second question, I think even when we do it and add up all the commitments made at Paris, they don't achieve the 2 degrees that is the target. It's funny, I had dinner a few months ago with the economist who invented 2 degrees, and it was interesting because it's now set in stone. He just needed a number, so now it's written in stone. It's how it happens. But I think what we said before, particularly what China's doing, and it seems to me that for China, and others may have a different view of it, but when I talk to them, there's climate in the way we politicians and people in this country and researchers talk about it, but for the Chinese, it's also pollution, what you said before, and it's not being able to breathe in the cities, and so the two just kind of blend together, and clearly they're aggressively pushing wind and solar in their own system. Thank you.
I'm an independent geologist. I have two questions, one practical, one philosophical, I guess, at this point. At AAPG, where I got a book by you signed, there was two presentations on U.S. Atlantic margin. One was from BOAM, Paul Post, my colleague, and me. And I need to write a paper as well on U.S. Atlantic margin exploration. You mentioned it briefly, that Trump is opening it up, and you mentioned the states. But most of the exploration targets will be in outer continental shelf, which is outside of it's in the federal waters outside of the states. So the first question is how much you think states will affect the decision of exploring in federal waters? And second question is bringing you back to what both of you started about globalization failure. Globalization is not going nowhere. I'm personally fascinated with some work, I'm not an expert on it, but what Joachim Galtung did, or Max Neef, Chilean economists, trying to find the ways for globalization and sustainability. So what do you think is wrong with globalization, how it can be fixed, why it's failing? So those two questions. So the states in U.S. Atlantic margin, and the second one, the globalization, what's fundamentally wrong with it, or nothing wrong, but how we can fix it? Thank you.
And the first question, probably need an energy lawyer here to answer the question, but I think, I was just noticing the state of Virginia saying that they're going to battle the federal things because, even though it's probably more likely gas than oil, that it could threaten tourism and so forth. So if nobody's noticed, we're a litigious society. And things end up in courts for a long time. So, and I think it will depend upon, there are people here in this room who would have a sense whether they really, how high a priority it is. I think there's some areas that will be a priority, but, people are focused on the Permian. They know what's going to happen here, and it's just Texas. So on your second question, I think that globalization has gotten a bad name. I think it's been great what it's done in terms of, there are issues about it, and there are trade issues and things to manage, but it's something that's really raised standards of living around the world, and a more interconnected world is a better world. But it's really talking about it in terms of, I think, the backlash against it. The other day I saw Tony Blair, who had taken a left-wing party in Britain and had moved it to the center in support of markets, and he said that's kind of what he said, a progressive center. But you look at the Labour Party in the UK today, and it's a really left-wing party. It wants to reimpose socialism, and and you just see that kind of criticism, opposition to trade, when trade is essentially quite beneficial to the world. So that's the way, just see this going. Again, there's cycles of it.
Hi, Dan. First of all, thank you for coming this evening and taking time to talk to the group.
Thank you.
Gary Brush, my question goes back to you had brought up a good point about mobility as a service and autonomous vehicles and electric vehicles. What's your sense of, in terms of, for example, the U.S., what's your sense of the time frame in which this might play out? Do you see it playing out more quickly, let's say on the West Coast versus the central U.S., something like that?
Well, I think that's a good point. I think it depends on urban density. I think people probably more in Houston like owning trucks more than people do in suburban Washington. I think there's a kind of differences that you can observe there. I think the mobility thing, I mean, the ride sharing, I mean, it's amazing. Uber, I think, has 2 million drivers around the world now. How quickly that has happened. You know, I think in our numbers, I mean, the only way we can really tackle this is with scenarios, because there's so much we don't know. So in one, we could see about 12, by 2040, about 12% of the global fleet being EVs. In the much more aggressive scenario we call autonomy, it would be something like 23%. But also remember, the automobile fleet today is about 1.2 billion, or, you know, they call it the auto park, but they spell park, P-A-R-C. That's the global auto fleet. I don't know why they call it park, but we're going to go from about 1.2 billion to probably over 2 billion cars as well. So we're continuing to add conventional cars, but they're more efficient cars, but adding them to the stock.
Is this because of the rise of the middle class outside the United States? Is that the reason for the growth in cars?
Yeah, I mean, traditionally, when countries get to the 4,000 to 6,000 per capita income, which is not really middle class, but that's when you see car ownership go up. But the question, you know, automobile makers, I think, or at least some of them are asking themselves, is that still going to hold true with younger generations? You know?
Yes, sir.
Okay. Dave Hansen, chairman of the MIT Enterprise Forum here in Houston. When I look at the oil companies and the service companies, they've gone through some major changes in downsizing, restructuring, to the point where, you know, they're bare bone now. It seems like there's less research going on, and there's also, it's harder to get access to good oil fields, particularly in foreign countries. What do you see as the future for major oil companies and service companies in the oil industry?
I thought you were going to go down the technology path on that. I think we're actually doing a study now for the Gates Foundation and for some other groups about energy innovation and, you know, what are the different modes and across the board from hydrocarbons to renewables and so forth. You know, we know that most of the major companies don't have the same kind of labs that they used to have. Service companies have taken a lot of that. Service companies have had a very very challenging time. But at the same time, we've seen this incredible innovation called shale, and just the continuing improvements in efficiency. And I noticed that at CERA Week, you know, technology has become more and more of a theme in everything. And, you know, now we have this whole area called the Agora, which is just devoted to kind of new technologies. So I think it's still, you know, I don't know if a lot of people in this room would have good views of that, but I think there is still very much of interest in it. I think a lot of the majors now have sort of their own venture capital firms seeking to promote new technology. So I wouldn't, you know, not be discouraged. I mean, it's obviously been a very difficult time for the service companies, but as I said, a lot of innovation has occurred even under duress.
I'm going to apologize to the questioners waiting. We're going to probably have to wrap this up, but I wanted to ask you one more question because I know you're working on a new book. So can you tell us a little bit about what you're working on?
Well, or trying to work on it.
Trying to work on it.
What I wanted to do was look, I mean, obviously a lot of what I've written about is the intersection of energy and geopolitics. What I wanted to do was kind of turn it around now and start with the geopolitics and see where energy fits into it. Mm-hmm. So, and do it still in a narrative way and in a very contemporary way. You know, I'm very conscious that we're in an age of Twitter, and you know, I myself look at when I read book reviews, how long are the books? So, trying to have the discipline. But I could tell you, the original version of the prize was twice as long as the book that was published. But now we talk about capital discipline. I'm looking for word discipline.
So, and how many years did it take you to write a book, and what's your process?
You know, I always think it would be so much easier if I outline the whole thing in advance, like Charles Dickens would do with a novel, but I don't do it that way. How long does it take? I signed a contract to do the prize in 2 years. I was 5 years late, but and then it was turned out. The Quest was only 5 years. Commanding Heights was about 3 years. I think, but how I write, I still go back to, you remember in about 7th grade, you learned how to do outlines? I outline, but not the whole book, but the section I'm working on, because then I can see the flow, how it flows. And then I do the first draft in longhand, because I feel it kind of gives more control over it and kind of more sense of rhythm. The only problem is time goes on, my handwriting gets worse and worse, so I have to type it up pretty quickly while I can still read it.
All right. So listen, thank you for your insight. Thank you for your leadership. You're an important voice in the world.
Thank you.
And we're glad you're doing what you're doing. We appreciate your advice to all of us at the Dallas Fed. And we're glad you're here. And thank you, all of you, for being here.
Thank you, everybody.